Hi guys, and welcome to another Daily Bread video. Now, I've been doing these videos now on a daily basis when I can since the end of September, putting out around 4 or 5 of these a week. And now we've reached 100 videos. So it's a great milestone, our first milestone to get to, and there'll be plenty more coming. Now, for those of you who are watching this for the first time, each day I put out one of these videos to give a full rundown of EU from the previous day, both technically and fundamentally, and we take a look at what to expect for the upcoming day. Or in this instance, at the start of the week, I try to give an overview of what to expect for the upcoming week. Now, these videos are posted in the premium channel for our paid premium members, where they don't just get these daily bread videos, they also get my course, the extra lessons, the 4-step process, live updates, and a host of other things. We also have the workaround strategy, which I designed to help those trade who have a busy lifestyle, whether it be like through work or family, or they just want to go out and play golf each day. These strategies are simple but effective strategies with a clear set of rules, either before you start work or at lunchtime, with more strategies to be released later in the year. The next one I'm doing is going to be an after work / early evening strategy to help those that obviously can't trade in the morning or during the day to trade when they get home in the evening. Now, all of this is included in a small one-off fee of £250 to help cover costs and improve the community, really. Like, all that money just gets pumped back into the community and cover any overheads that the community has. If that's something you'd be interested in and would like to take your trading to the next level, then please just drop me a message and we can work something out. Now, one last thing before we jump into the charts. We've recently partnered up with a prop firm, and unlike other communities where they get you to sign up for an affiliate link, so they're making a commission, I've made it clear to them that I don't want to be profiting off my recommendations, but instead to give you guys a bigger discount on their challenges. So which they've kindly agreed and given us a massive 40% off discount code. So the discount code is ON40, so ON40. And this discount code will last for 2 weeks and then will be followed by a discount of 25%, which will be all the time. So some amazing discounts that we can have with these guys. The prop firm is called Alpha Capital Group. If you can't, just Google them, and if you can't Google them, just message me and I'll send you a link. But I didn't want to put a link up for them just so you know I'm not obviously using an affiliate link for them. The reason I've chosen these guys is I actually know someone who's heavily involved with them, and he put me onto their director, which I've been going backwards and forward via WhatsApp, and I've also spoken to him on the phone a few times. This is one of the biggest things for me, that we have that direct relationship with the director and the company. So if there was any issues, he will be able to get it sorted for us. The challenges are pretty much the same as most prop firms, with like an 8% and 5% targets on your challenges over a two-phase period. And the spreads are pretty good as well, but pretty much the same as FTMO and my Forex funds. But unlike other prop firms, these guys don't charge a commission. So when you place a trade, you automatically have a commission added normally on the other prop firms. And then it's obviously, so you always start your trade in drawdown. With these guys, they don't charge a commission. So it's another little thing that helps out. Their website and dashboard is probably one of the best and easiest to use I've seen around. And going forward, these guys I will be looking to use. So like I say, I'm not on any commission-based affiliate link with these guys, so I'm not trying to push them on you or anything like that. But if you do need them and you are looking for a decent prop firm outside of FTMO and my Forex funds, I would highly recommend these guys, and that's Alpha Capital Group. Now, right, on to the charts from last week. So we had a bit of a strange week with NFP on Friday. So on last weekend's Daily Bread video, obviously when we closed the week, we was down at these down at these lows, and we broke some minor structure. Now, for me, this is always a fake break of structure, and we're just looking to grab all this liquidity. So what we said is, look, when we push up to this level, normal smart money traders or retail traders will be looking to trade off this level just up here. This being the smart money trap, and we don't trade that smart money trap. We know that we've obviously got this double top just here, so we've got these equal highs just here. We've got these weekly, this was our previous weekly high, and we have another previous weekly high just above. So we have all this liquidity sat just above here. And we always got to remember on these levels, we're never just going to pick these levels, because we've got like obviously stop losses and stuff sitting above this levels. Now we don't know where that pool of money is. It could be just above here, it could be here, it could be right up here. So we just want to wait and see what the market does. And that's why we kind of wait for our entry drills. We wait to see where that pool of money is taken, and then that sort of impulse of a downside, and then we look to be entering the market. Now, as we obviously we had that sort of initial reaction on Monday off that smart money trap, didn't really go too far, and as you can see, that was run, taking a lot of liquidity and got another reaction off before obviously pushing higher. Now that push higher was on Tuesday, and then we sort of just played around this level. Now, I don't always like to see this like this. This is obviously a typical NFP week. And we also had the ISM services data release, where we just sort of play around here, where we're just sort of creating trendline liquidity. We're never taking out that high. We like to see if we're going to obviously have that big reversal, we're going to have that sort of initial push up. We take out that high, we impulse to the downside, we pull back up, it closed to mitigate any areas that are left behind, and then that's where we can sell off from. And we wasn't really doing that. We were sort of just pushing up during these sessions. I think this was an Asian session. London session never took Asia, and then New York never took London, and then we obviously had that big move down on Wednesday afternoon. Now, the reason for that sort of big push down was on like Wednesday's ISM services data release, which we singled out last Sunday in the Daily Bread video as being one of the market movers, and it didn't disappoint. So yeah, now we've just kind of started to engineer liquidity on both sides of the market, because what did we do? We're sort of just pushing down. We're failing to break this level, but we're creating equal lows. And then we was just creating these equal highs just here. So on Wednesday night's Daily Bread video, I think it was, we were saying we was looking to either push down, deliver that discount, take out these equal lows, take out the grab the sell side liquidity and push higher. Or if we pushed higher and delivered this discount and took the buy side liquidity, that we could then look for shorts to target these equal lows and deliver that discount. So when we come through to Friday's NFP, let's just have a little zoom in on this area just here. We're using our workaround strategy. We was obviously on a bearish trend, and we was looking now to target that sell side liquidity. We did have our POI just here, and this is where we get that sort of fake break of structure that I've been talking about on the last few Daily Bread videos. And I'm going to do an extra lesson on this, because obviously if we break out to the upside here, now everyone's now looking to go long, aren't they? Because we've broken that structure. But realistically, we would just did a liquidity wipe. And what I always like on this is how you can sort of tell is obviously we've kind of just got these sort of relatively equal lows down here. We know we want to push down down to the bottom to take the sell side liquidity. And so we obviously had that initial reaction. So I took my first short here, which obviously was a loss. But that doesn't matter, because obviously I then obviously got in a bigger trade with a much better RRR. But when I look at this level here, obviously we pushed up, took this liquidity, and then we had a big engulfing candle. And then this is where I look to enter my stop loss just above this high. And then obviously NFP kicked in around 130, was it? This big candle here. And then what did we do? We pushed straight back down, delivered that discount, took that liquidity, and then started to pull back. This is where I closed about 80% of my profit and left 20% running. But it was a nice sort of 1 to 9. And sort of gave us a very nice week. So we had a bit of a slow start to the week. We're taking a couple of little losses here and there. But then we had on Wednesday, let me just check. On Wednesday we had a nice little buy on EU, and on Thursday we had a nice little buy on EU, and we had a sell on AJ, and then obviously we had this sell on EU in the afternoon as well. So it gave us another profitable week. And it's just staying consistent now every single week. Like if you start to have that sort of not so good at the start of the week, then we're just kind of just waiting for that sort of one trade. We have that sort of really good RRR. So we know that if we do just catch a nice trade, then it will make a week. One good trade makes a week. That's why we stay patient. We're not trying to jump into 4 or 5 trades a day. We're just looking for sort of 1 or 2 setups. Obviously, we have a few different strategies, so maybe even just sort of the best setup or 1 or 2 setups using the different strategies depending what strategy you can trade. But realistically, you only need 1 or 2 trades a week to have a very good week, and then that being a very good month. So yeah, this trade then gave us a nice healthy profit. So we stated last week that if the NFP numbers was above 200, then we'd expect the Feds to hike by 25 points at the next meeting on the 3rd of May. This giving us a stronger dollar. So the numbers actually came out at 236,000. So obviously then that gave us that stronger dollar. I also introduced you to a website last week called the CME Group. So if we just have a look at this one here, CME Group, if you just type in CME Group FedWatch, it'll come up with this website. Obviously, it'll tell you when the next meeting is, and our next meeting is on the 3rd of May. Now, when we went over this on Sunday, we were very mixed. So we were about 50-50 if we were going to have no change or if we were going to hike. And now, as you can see, after we had them NFP numbers come out on Friday, the market is actually changed and is now pricing in that there's a 70% chance that we're going to hike by 25 points. And there's only a 30% chance that we're going to hold. So it's always worth keeping an eye on this website so we can kind of see what the markets are doing and what they're kind of pricing in. So it's a great tool to use, and I'll obviously be using this a lot more in our daily bread videos. Moving on to this week. So let's just have a quick look where we're at the moment. So what we can do is let's just clear all of this off. Have a little bit of a tidy up, and then we'll mark out exactly what I'm looking for this week if my computer decides to not freeze. Sorry about that, guys. I actually lost connection there. So what was I saying? So back onto this week. So now we've got this sort of previous weekly low and previous weekly high. We know we've got all this liquidity up at these highs just here. And if we actually just turn on our indicator just here that marks out our sessions, we know we've got this previous daily high from yesterday here, and we've got all of this liquidity sat here. So we've got Asia, London never took out Asia, and New York never took out London. So again, we've got all of this liquidity here. So what I'm probably looking at today is that maybe we're going to get that sort of push up, deliver that, take that, like deliver a new high, take out that liquidity that's sat all just above here, and then we're going to get enough fuel to push us down to the downside to potentially take out this previous weekly low and create that weekly low before obviously looking to target more liquidity to the upside. My other option is that we're going to have a bit of a pullback and we're just going to keep pushing now and obviously target this liquidity that we had that we didn't have that we didn't take out last week. So if we just jump onto the DXY though, as we can see here, obviously we had that big push up on yesterday morning, and we're looking just to recover that price action. So we took out liquidity here and we pushed up. So we've still got a little bit more room to sort of push down and sort of recover this price action. So with that being said, that could actually push up and sort of take this previous daily high, and then we get our next move to the downside. People obviously looking to long, and we can look to carry on that short down to take out that previous weekly low and recover last week's price action where we've got all of this imbalance just sitting in here. We kind of just created some equal lows. So these are my sort of targets that I'm looking for, probably on a weekly basis, obviously looking to sort of maybe target this sort of weekly low, get that dollar strength, as we're now starting to price in that sort of Fed hike. But to get down to there, we would always look at our first move. So our first move would be to try and grab some of this liquidity up at these highs, get enough fuel, get enough orders in the market to push us down to that weekly low. So that's pretty much what I'm looking at for this week. Obviously, I'll update as we go into each session, and I'll update as we go on each day using the daily bread video. So news this week, let's just have a look at our news schedule. On Wednesday, so on tomorrow, we have that CPI data just here at 1:30. Now, the CPI report will play a big part in whether the Fed will hike rates much further. Another 0.4%, which at the moment has been forecasted as 0.2. But if we did come out at another 0.4% month-on-month figure on the core CPI, which is more than double the rate required over time to take the US back to its 2% year-on-year inflation rate target, which could nudge expectations for the upcoming interest rate change that we are going to push higher. So keep an eye on this CPI tomorrow. This core one, which is here, this forecast. So if we do push up a 0.4 of these, if our month on month and our year on year are also higher, we will see a stronger dollar, which will give us that that move to the downside like we've been looking for. So maybe it'll be that we obviously push up today, looking to clear some of this liquidity, and then we'll wait till tomorrow. We'll create that sort of weekly high. We'll look for that midweek reversal, and then we'll get that big move to the downside with that CPI. We also have coming up on Wednesday our CAD interest rate change, which obviously CAD can affect the dollar as well. For me, I'm expecting rates to remain unchanged as we are likely at the peak. They don't really need to hike as much as the dollar does. So we're keeping an eye on that. And we've also got the FOMC meeting minutes at 7 o'clock to keep your eyes on, to see if there's anything in that. On Thursday, we have the PPI on Thursday, so keep an eye on that, and the core retail sales on Friday. So a bit of a busy news week, something each day. We had a bit of a slow start to the week. Obviously, it was a bank holiday and stuff for the European markets, and we are seeing them sort of open up for the first time since Thursday and looking to recover price. So obviously, the European markets were closed since Thursday because it was bank holiday and Easter. But when we had that sort of big move down here from NFP, and the European markets want a slice of that action. So they're not going to be wanting to get into their sales from that NFP move halfway down here. They're going to want to push price higher, get a better price, and then look to short down. So overall, this week, I am very much bearish. But I am looking to see what sort of liquidity is taken. I'm looking to see what the high probability zones and where we can enter the market. As always, we don't enter the market until we see our 4-step process. So we need to obviously follow that structure, see the liquidity taken, look for our POI, and then get our confirmation in our entry drill. So that's pretty much it from me today. If you do have any questions, please drop me a message.